Okay, you guys, we're now going to look at some notes for Chapter 16. We're actually moving into managerial accounting topics at this point, which is the name of your course. Schools just usually choose to cover that statement of cash flows, the last of your financial statements, and financial ratios that are computed from your financial statements in this course. Now, you could definitely make an argument that the statement of cash flows and those ratios would be very useful in managing the business, but we're moving squarely into managerial accounting topics at this point. What we're concerned with, if you look in the beginning of the chapter, they go through some of the differences in managerial accounting and financial accounting. The big difference to me is in who uses the information. You know, the financial statements go to parties outside the business. We've mentioned this several times through the first course and now in this one. They go to lenders, potential investors. If it's a publicly traded company, they're actually public information. You could look up financial statements of any publicly traded company online now. But managerial accounting reports are used in-house to help management make some type of decision. What we're going to look at in the first few chapters would be how management determines the cost of a product, a manufactured product, and what goes into that. We'll get into some other topics later on as well. So I think if you're taking this course and you're not an accounting major, you might find the remainder of the course a little more interesting than people who like financial accounting. I really enjoy both, but for non-accounting majors, sometimes this one can be a little more interesting. I hope it is anyway, and I hope you're all doing well. If you're not, please be in touch via email, or you can reach me on my cell phone anytime at 828-593-0459. Also, I'm available for tutoring. You just call the Learning Support Services to schedule that, or come by during my office hours, which are on your syllabus. The phone number for Learning Support Services is 828-627-4696. Okay, so let's move on into these notes. We have three product costs, or three costs of manufacturing a product. That's just two different ways, really, of saying the same thing. Okay, we have direct materials. Those are materials used in the product itself, plus any packaging. Okay, so let's pick a product. Let's say we're making chocolate chip cookies. Flour, sugar, eggs, chocolate chips. I don't know what all goes into chocolate chip cookies, but those would all be considered direct materials. Now maybe we're putting those cookies in a sleeve and then in a bag. The sleeve and the bag would also be considered direct materials. The packaging of the cookies. Okay, direct labor would be the labor or wages paid to employees who are working on making the cookies or packaging the cookies. It doesn't include any supervisor salaries. It doesn't include any cleanup staff or janitorial services, any inspectors. Only people actually working on making the product, in our case cookies. So the person running the mixer, person running the oven or the packaging equipment, they would all their wages would all be considered direct labor. Now, this third category is a bit of a catch-all. If it's a part of the cost of producing a product, in our case chocolate chip cookies, but it's not direct materials or direct labor, then it's going to be considered factory overhead. Electricity on the manufacturing facility, supervisor salaries, any indirect materials such as cleaning supplies, or any indirect labor such as inspectors or cleanup staff would be considered factory overhead. Okay, but if it's the cleanup staff of the executive's offices, then it's not a part of the cost of producing the product, right? It's a cost incurred in the manufacturing facility typically that's not direct labor or direct materials. Insurance on the plant, depreciation on machinery, all those would be examples of factory overhead. Now these costs are carried on the books as an asset in an inventory account. We're going to look at the different inventory accounts in a moment, until the manufactured product is sold. So direct materials, direct labor, and overhead are included as an asset on the balance sheet until this manufactured product is sold. Sorry, my dog likes to bark sometimes. But once the manufactured product is sold, its cost then becomes an expense. Okay, so direct materials, direct labor, and factory overhead are all included in an asset account until that manufactured product is sold. Then the cost is transferred out of the asset account and into an expense account. Now let's look at the flow of product cost through the manufacturing facility. Well, first we'd have raw materials inventory. Okay, now this would be inventory that are raw materials or materials waiting to be used. They haven't actually entered the manufacturing process yet. So flour and sugar sitting in the warehouse waiting to be used would be considered raw materials inventory. Now once those raw materials are moved into the manufacturing facility, their cost then becomes a part of work in process inventory, where direct labor and factory overhead are added to convert the work in process inventory into our next account, finished goods. So as long as the cookies are still being made or packaged until they're ready to sell, they're a part. Once they enter the manufacturing facility until they exit it ready to sell, they're a part of work in process inventory. Then once the product is completed, we'll transfer its cost into finished goods inventory. Those are goods ready to be sold, but still an asset. Then once those finished goods are sold, we'll transfer the cost into a new expense account called cost of goods sold. I think it kind of helps to understand this if you've been in or worked in a manufacturing facility. You know, you have a warehouse where we stock supplies of inventory of raw materials. At some point, someone takes the forklift and moves those into the manufacturing facility, where direct labor and factory overhead are used to convert those raw materials into finished goods. So those are the goods coming out of the factory ready to be sold. And then all three of those are assets, inventory accounts. But then once the product is sold, its cost then becomes an expense because all the benefit is then in the past. All right, now we have two period costs or non-manufacturing costs. Those are selling expenses and administrative expenses. You're familiar with those. We've seen them before. Sorry, I thought I had that paused. I just wanted to tweak it a little bit. These costs are never on the books as an asset. Instead, their cost is taken as an expense in the period in which the costs were incurred to earn revenues. So these are never carried on the books in the inventory accounts. They're just expensed in the period in which they're incurred. I'm also going to try to post a video of where we took a tour of a brewery and pointed out some of these items. We pointed out, or you at least got to see what they used as direct materials, what their direct labor costs were, or what some of them were, and some of their factory overhead. Then you'd also get to see the raw materials inventory. At some point it would move into production when it becomes a part of work in process. And then once it's finished product ready to be sold, it's in finished goods inventory. Once a customer buys it, it becomes a part of cost of goods sold. So I'm going to try to post that video as well. I haven't posted it in the past, but I think I can convert it in. If you have any questions, please let me know. Now, your problem that we're going to work here in Chapter 16, ask us to label some cost as either direct materials, as either a product cost, direct materials, direct labor, or factory overhead, or as a period cost, selling or administrative expense. Alright, thanks a lot. If you have any questions, please be in touch.